Hey guys, this is Julie. I want to take a drill into the VIX and share some things with you guys. So here is the VIX contract on the daily chart, and this is a monthly distribution. The 68% of the range in the middle, and that's where they like to keep the volatility. And if it does break the one, you look to the two and the three. Got a little bit outside the range here. Um, And you can see here currently we're right in the middle of the range of the monthly. So I have noticed my empirical experience that they like to do this going into the week preceding the high volatility because you've got the expiration and your OPEX coming up next week. So take that into consideration. You can always go back and look at your chart at that third week, that third Friday, and the Wednesday, either before or after that third Friday, and see your peaks and valleys for the volatility correlate to that. So, plenty of room to move up and down in this vol regime, and the monthly range is at 1281. We're sitting right on it at 13 currently, so we're right above the monthly range, and keeping the close to the upside of that range, showing that they're positioning for that future push of the volatility. So, how can we measure where we are? Here's the daily volatility. I like to look at daily and weekly as well as monthly to get me an idea of where these ranges could be moving to. And on an intraday basis, how far the variance will be for the spikes. And you can get an estimation of how low we are in the volatility world by looking at this distribution, one being 100% of the daily range, and my distribution, the 1, 2, and 3, 34%, 68%, 95%. So we can, um, you know, get our interpolations of 23% of the daily range for the VIX is sitting on 34% of the normal distribution. So you would have to do this sort of mental extrapolation of this interpolation. I don't know if that makes any sense to you, but you can see here that the white line is our current daily current vol on a one period basis, and we're below the 23% of the 34%. We're at 18%. So we're in historically extremely low volatility as represented by these low ranges that we've had in the equity indexes. So that's why the equity indexes have been so pinned. My indicator, once you get it, is so easy to understand because, we're giving you real vol levels, one, two, with multipliers that you can understand: one, one and a half, two, two and a half, three, three and a half, four, four and a half, five. So you can see this distribution sitting below 100% shows that you're just flat in this flat zone. It can spike up and down, but the distribution has remained below the 100%. That will change in a high volatility mode. So, like going back and looking at last year for this time of the period, the vol spiked in March, and you can see the distribution rose with the volatility to 300% of the daily range we were averaging, right? So 200%, 300%. So you can get an estimation for how much risk you're going to need by looking to see where these levels are, where the distribution is in relation to where your levels are on any period that you choose to examine. So a 1 period, 14 period, a 7 period, on a 1 day, 2 day, 3 day, 10 day, you can mix and match it pretty well. which is what we have our method of trying to anticipate what the current volatility range is likely to be on a given trade session at the open and close. And you can see here today we went right up to our first target and came back, and we're in this very low volatility frame. So our first target today, 1308, 14 period daily 1. Price came, tagged it, and pulled back. And so if we, see lower volatility, we might return to this prior close and perhaps the lower level at 1272, which is right here below the open. So that is our first vol level of the 14 period daily 1 below the open. So if we do get a lower thrust, that's where we would expect to look for volatility to reach. And if we get a higher thrust, we can look to our volatility zones that our indicator has given us, matching our calculations for what we perceive to be these range opportunities. And we gather, our logic based on our indicator, which is available through the NinjaTrader platform. And we can run it through the market analyzer and get specific time frames throughout the day for these time periods, and match what's going on with that one period against the intraday range, even dissecting it further. But as you can see, this is the daily range. Market wasn't able to reach the 5,000 in the SPX yesterday. We had this daily 2 confluenced with, I believe there was also a higher time frame level sitting on this. Take a look. Oops. I don't have the higher time frames on here, sorry, but here are some ones that we're bouncing off of that are holding the support at the moment, and going to try to make another run for this 5,000 level. So I know that the traders really, really, really want it. They have their eyeballs set on it, and we're in a low volatility threshold, so it would make sense that they try to hit the target before it turns around. But we'll see what happens. It was pinned yesterday. But you can get the JATS volatility indicator, apply these points and levels to your instruments. Here is the ES, came up to the daily 3, which was confluenced with that 1 hour IB 1. And also there was a monthly level that is in play for this contract. So if you like intraday levels, I think you're going to like JATS just as much as our higher time frame participants like to use the levels to gauge their risk for spreads and hedging. All right, guys, I hope you come and check us out. And we'll be introducing some more options into our programs going forward. Thank you so much. We'll talk to you later.